Morning everybody, I'm Rick Spooner. Welcome to CMC's market update video for Wednesday the 8th of January. We saw a bit of confidence return to world equity markets last night, strong sessions in both Europe and the US. Markets in particular liked the fact that the US trade deficit was smaller than expected. Particularly encouraging, I think, to see the US now well and truly getting the benefit of their increased oil production. So we saw oil imports there in the US the lowest over 3 years. That helped a 4% drop in overall imports, and this will be an ongoing structural benefit and a plus for the US. So the trade deficit now starting to chime in with the housing market, manufacturing and an improved consumer spending as things that are looking as though they're going to support improved GDP growth for the US. Market also liked the fact that the number of unemployed people in Germany dropped to 15,000 last month, which was a better than anticipated result, and some pretty strong gains as well in Southern Europe as the market is becoming increasingly confident about some sort of recovery going on there. Well, let me start off this morning by just a quick look at the chart for the US 30 or Dow Jones, which we've been following. So as we see, a good strong green candle last night, but it very much remains to be seen whether this little bit of confidence after a nervous start to the new year is going to translate into a new uptrend or not, or just be a minor blip. And I think the key really is going to be whether and when we take out the recent high here just above 16,600. So certainly if we were to continue on now with just a very shallow correction and up above that high, that would be a pretty positive looking move technically. A very small correction, which is typical of a strong uptrend, would certainly give this a positive look. But the alternative is certainly very much still in play, and that is that we may have seen a little bit of a rally last night, but if we were to continue to drift down here, then certainly there's plenty of scope for the pretty large move we've seen off the base of this channel formation to be corrected further at this stage. We saw a very strong market in the Spanish index last night, and so this is really starting now to join the fray as something that's supporting the atmospherics, if you like, of world markets. I'm beginning here by looking at the weekly chart, but we saw a 3%, best part of 3% jump in Spain's index last night, the IBEX, as well as a decline in their bond rates as markets just start to even wind back even further the risk premium they had associated with Southern Europe. So to look at the big picture of the weekly chart, we've seen a decent recovery off the lows already, of course. I moved from around about 5,500 to now up over 10,000 in this index. So far we look to have been following a five-swing structure, and the relevance of last night was that we exceeded the previous peak here at 3, suggesting that we could be now embarking on the fifth and final leg up in this first bigger leg up in this market, and also of course well above the 200-day moving average, or 40-week moving averages I've got here on this chart. Just looking in at the daily chart to get a bit more focus on last night's action. So we see this very big candle last night, 3% gain as I say. So the thing that market will be looking here for to begin with is holding above the support of the last resistance around 9950, but beyond that potentially the 20-day moving average, which we're now well and truly above. What happens in our market today though, and how much we carry on with the strength of the European and US sessions, if at all, I think is going to be possibly dependent on China. So the market's going to be very focused on the Chinese trade figures and export figures today to see, and certainly there's potential for nervousness if they are weaker than expected and something that adds to an overall softer tone in Chinese growth recently. Another thing I think of importance for the market will be the iron ore price. So a big factor in yesterday's market was a significant decline in the iron ore stocks, following a bit of a faltering in the iron ore price. So I thought it was interesting just to have a look at the Tianjin index for 62% fines iron ore landed at Tianjin port in China. And as you can see, we've broadly been moving sideways now since more or less the middle of last year. But we formed ourselves into a triangle pattern in doing that. And the support down here just in the low 130s area. So if we were to fall away from here and break well under this support, that would certainly be potentially a source of downward anxiety for Australian resource stocks and for the iron ore stocks in particular. One of the biggest movers in the foreign exchange markets last night was the Canadian dollar, or the loonie. There was a downward revision in their trade balance figures. So what had previously been reported as a trade balance now turned into a trade deficit. That saw a big decline in the Canadian dollar against most of the currency pairs. The logic there being that this was seen as a clear incentive for the Canadian Reserve Bank to leave the currency weak to try and support their trade balance and export market. One of the more interesting moves, I think, from a technical point of view, was the Aussie against the Canadian. So this currency pair has now joined others, like the Euro Aussie, for example, which appear to have, in this case, broken up above near-term trend support. So we saw Aussie Canadian break above this well-established trend line last night. Also completed a minor double bottom pattern, just that little small W-shaped pattern there with a clear break through the high of that now over the last couple of days. And encouraging also, I think, to see the RSI, which is now clearly trending up. I've got a 14-day RSI here and heading up well above 50% now. So this has possibly the look of a market that could continue higher now. And depending on your strategic approach, one approach now would be, now that this break has already started, for those who didn't join the break following the trend line break, and still, that's still well and truly a possibility. Others may prefer to wait for a pullback now against the first trend to try and join after a correction, perhaps some sort of a retesting action to look for higher moves. So this is another chart that I'll come back to if it develops in an interesting sort of a way over the coming days and weeks. Thanks very much for joining in this morning.